Let me now bring on board Anirudha Dutta, market analyst. Anirudha, good morning. Thank you for joining us. This is your first interaction for this year, so good to have you back on ET now. Let's talk about market specifics. Are you a bit rattled, a bit shaken up with the way how Indian markets have moved in last 1 month? Developed markets are moving from strength to strength, and Indian markets are moving from weakness to weakness.
See, if there was anything surprising about the market move this year, it was the strength earlier during the year. Because not much was happening as far as the economy was concerned. If anything, it was slowing down further. And you still had this very strong foreign inflows which drove the markets up, or at least held it up. I think that was more surprising. Given that there's been a spate of bad news in terms of whether it was volumes from the auto companies and order backlog positions of some of the infrastructure companies, the fact that there's no revival in investment whatsoever. Therefore, it's not surprising to see that markets taking a step back. Finally, it was led by global inflows. There's been no support at all from domestic inflows. If anything, the domestic investors have been net sellers at the end of the day through the year. And therefore, as that inflows dried out, or there's been a small withdrawal over the last probably 3 or 4 trading sessions, it's not surprising to see the markets coming off.
Anirudha, hi, morning. We've already come off close to about 400 points for the index itself from the start of the year. Is there more selling to go, or are we done with around 5550, 5500 sort of levels?
Well, look, I really don't have, a handle on that, because a lot of it will, as I said, continue to depend on global flows. But given the fact of what the on-the-ground situation is, I would think this market has still downside left.
What about earnings? When we started the year, the general chorus on the street was Indian earnings have bottomed out, but off late, if I look at the research reports, the consensus opinion is that it will be a while before earnings will bottom out.
Absolutely. I think now finally reality is sinking in that things have not improved and things have continued to deteriorate. So all the talk about that third quarter is where the bottom is, etc., is clearly not true. And as the fourth quarter results come out and the result season is about to kickstart, I am sure you will see further downgrades from various brokerage houses. I have no doubts about that. And if we look at about the entire bottoming out, what was it predicated on? It was predicated on the fact that interest rates are likely to come down, which they have. At least the RBI has done its bit about cutting interest rates. Second was, for some reason, we expected that the GDP growth has bottomed out, which was more about base impact rather than any conviction on anything happening. And third was a lot of articulation from the government side about things that are being done, which were being mistaken for action. And all these three were I think, were the reasons why analysts and others watching markets and corporates expected things to bottom out. But now the realization is coming in that there is no pipeline of projects or new projects which are being announced. And interest reduction is not going to revive these projects. At the margin, yes, it will help some over-leveraged corporates. It may help in pushing up a little bit in demand on somewhere in the real estate side or parts of the automotive segment. But there are larger issues with this economy. Today, I think the CMI data I was reading somewhere that in the fourth quarter, on a YOY basis, the new project announcement is down 75%. Now, that's a huge number, which means we have continued to get worse.
Anirudha, you're sounding really bearish, really bearish. But let me remind you of this conversation we had a month ago. Of course, that was off the record meeting. You clearly made a case that it's time to buy into quality consumer names. So what do you like from the consumer basket?
Yeah, so look, it's again back to then very defensive names, right? So we spoke about the IT, we spoke about pharmaceuticals, we spoke about consumer names, and maybe selectively the quality financials. And while I wouldn't like to, get into specific stock names because I don't follow things as closely, I look at more the larger picture in what I do. Fact is that, if the global markets or the developed markets are in a better position today, or more money is moving into there, clearly if you have to invest out here, you then invest in the IT and the pharma companies, which probably are beneficiaries and good places to hide. Consumer, again, I was watching the chief economic advisor's interview a while back on your channel, and what he said, if we need to correct the current account deficit problem, we need to boost exports and bring down imports. Now, if you are going to boost exports, that's completely not in your hands, because it will finally depend on what the demand from the developed markets are. And if you want to bring down imports, clearly you need to crimp consumption. So if the current account deficit remains as strong as it is now, the consumption will get crimped. And therefore, certain consumer sectors will also feel the pain of the same. But still, I think it will be a relatively better place to hide than your industrials and the discretionary consumer sector. The staples would be a better place.
Staples would be a better place, but why is that you don't like discretionary stocks, especially autos? Because auto stocks have been beaten bad, black and blue. And if I look at, let's say, a name like Maruti, which I know you tracked in the past, it is available at a P multiple of 12 times. 12 times for Maruti, throwaway level.
Right. So a lot depends on what your investment horizon is. So I'm sure some of these names will start looking attractive because the consumer names are very expensive. And sooner or later, there'll be a reversion to mean. And I wish I was a great timer of the market. I don't think I have any clue on when that turnaround is. And at that point of time, and also there'll be a reversion to mean on the consumer side as well, and the rest of the economy, which will start looking up. Now, whether it's 2 years down the line or 3 years down the line, I have no clue, or whether it's 1 year down the line. And depending on when the turnaround is, some of these quality names, you mentioned Maruti, maybe the two-wheelers as well at some stage will start looking good. Although I think the competitive dynamics in the two-wheeler market would make one more cautious on the listed plays than on the four-wheelers like Maruti that you mentioned.
Anirudha, you just talked about the financial and banking space. Where do you find value, and would it be the obvious names from the private banking lot?
Yeah, more than value, I think it's the longer-term story of banking penetration and financial services penetration opportunity in this country. So, while credit growth is slowing down and the NPL issues, etc., are there, if you look at it, the private banks have held up quite well as far as the reported numbers are concerned. And therefore, clearly, I would go for just the top quality private sector names. So, you can pick your choice. It would be the likes of HDFC Bank and ICICI Bank and Kotak. Those are the ones to probably look at.
Anirudha, the entire pharma space is a complex space. Just like one shoe does not fit all, pharma as a group cannot be generalized. What do you like within the pharma? You can give me names, you can give me themes, or you can give me businesses.
I have very limited understanding of the space, so I would refrain from making any comments on company-specific issues. And I've not been following the pharma analysts very closely to really make an informed comment. I'm sorry about that. Okay,
let's give that one a skip, but a place again which I know you track with the magnifying glass is the entire PSU banking space. And your views in the past were, wide open. You don't like PSU banks at this juncture, but is there a tactical trade there?
See, there might be a tactical trade at some point because of valuations. And as the NPL cycle, kind of bottoms out, sure, the PSU banks will do well and may even outperform for some time the private sector banks. But structurally, as I said, if the financials is a long-term call, in the longer term, what you continuously see the PSU banks ceding market share and quality market share to the leading private sector banks, and that imbalance will continue to only grow over a period of time. I don't see anything which tells me that these things are changing.
Final question for FY13, quality dominated Indian markets and leverage was considered as a dirty word. Do you think that trade will continue where quality stocks, they will continue to trade at a premium and beaten down leverage or beaten down value stocks will not make a comeback?
Yeah, so the beaten down value stocks have been outperforming in very, brief spurts as optimism builds up about whether it's government action or whether political stability or what have you. Or base level impact. But I think given the current environment, given the uncertainty around politics with Delhi seems to be on an election mode really, I would still continue to think that the defensives and the quality names will continue to outperform over a period of time. Although week to week or a month to month basis, things may change.